This conference will now be recorded.
So can anyone try to give me an information like in the last two classes what we have been discussed in the session? Can anyone put an overview?
So we did on finding interest compounded yearly, then monthly,
Okay.
quarterly, all the ways. Yesterday we
Okay.
did how to find each month also. What happens,
Okay.
how
Okay.
do we calculate for each month, and a couple of sums based on it. That's all.
Okay. 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 Fine. Hope everyone are able to see my screen. So yesterday, ma'am has been shared one document to you people. Have you tried with this? So was it the discussions, whatever it was been done, whether the questions were on this? Can anyone let me know that? Is it the same?
Yes, sir. We also did the
Okay,
second,
the
what do
dead
you say,
one, right?
second page of it also.
A dead one.
Yes,
Okay, then dead two, compounded quarterly.
we have to do that, sir.
Okay, so and dead three also to be done. So was it
Yes,
been
sir.
explained how to do with this?
So your screen isn't visible.
Okay, so I'll reshare the screen. Please let me know that. Is it now? Is it visible, ma'am?
Yes, sir, it's visible now.
Now it's visible. So Was it been explained how to calculate this? So how to calculate these values?
No,
So
sir.
okay,
It was not
so
explained.
fine. Now, in case if you want to calculate this as a yearly, so can anyone guide me that how we can be able to do with this? So let me take this as an example. So what could be this value?
So for year one, the beginning loan is 75,000.
75,000. Good. Yeah. Then, so what is the function we use it to calculate the EAI? So it is equated annual installments. So what is the function do we use it to calculate this? Because this is how, this is what we are going to use it when we are going to have any uh, loan on the business. So we are supposed to pay it. So even that interest amount also will be considered as an expenses. So that will be a part of our calculations of a financial statements. So for that reason, so even knowing on this also it will be it is a mandatory one of it. You have to do it as one of our procedures to find out the final value. What is the return on investment we can go to have it.
So
So
is
what
it
is the
equals
function?
to
Yeah,
PMT?
yeah, yeah. It is PMT. So what is the rate of interest? So it's a 7%, comma. It is N per. So that is how many number of years you are going to pay this money. So how many years as per this information? It is 6. Then what is the present value? So
Minus
PV stands for present.
75,000.
It's minus 75,000. So you can give it here as a 75,000. And while writing this formula, okay, just give me a minute. Yeah, sorry for the inconvenience. So we shall be able to calculate it. So either you can put the 75,000 minus before the 75,000, or you can add it. It's a both in any ways. Okay, and you should know that why we are giving this, which is not ethically correct, but only for the purpose of calculating, we are giving it as minus because this EAI amount is going out of my hand. So when you are doing a calculation, you should see that whether the cash is coming in or going out. When the cash is coming in, so we have to accept it as a plus value. When the cash is going out, the money is going out either in the form of cash or bank. So you are supposed to show it as a minus value. That's it. Because EAI we have to pay, so we are going to show it as a minus. Is that clear? Okay. So now, then FU value. So is there any FU value, that is a future value? We can find it here.
No, sir.
No, sir.
No. So it is 0. So when you are calculating PMT, so fix it that FV value will be 0. Then comma. So is it end of the period you are going to calculate it, or for the beginning of the period?
End of the period, sir.
It is end of the period. So either we can select it by using a tab, or you can give it directly as 0. So it acts in the same way. So I'll close this and press enter. So yearly I'm supposed to pay 15,734 rupees 68 paise. So I'm supposed to link with this. So you have to know that how you can be able to give a reference. Okay. So instead of writing the value manually, I'm going to select this and I'm going to give a value. So I'll press enter. So equals to before is nothing but 15,734.68. Right. So now how do we calculate the interest amount?
75,000 into 7% interest rate.
Yes. So it is, you are supposed to select it. It is not always 75,000. So you have to know that what is the beginning loan amount for that year. What is the opening balance? So that value into 7%. Enter. So it is out of 15,734 rupees 68 paise, 5,250 is your interest amount. The remaining amount. So what is the calculation of principal repaid? How to calculate the principal repaid?
EAI minus interest.
Yes, good. So that is EAI minus interest amount. So the remaining amount 10,484.68 is the principal amount it is considered. Then end loan. So what is the formula for this?
Loan beginning of the year minus principal repaid.
Very good. Beginning loan amount minus the principal repaid. So this is the amount after paying the EMI with the interest. So the remaining amount is 64,515. So on this we are supposed to calculate. So beginning loan amount will be always the last year's closing balance. Okay. So like this you have to link it from previous year to the next year. So now EI amount, will it be the same or should we calculate it?
It will be the same, sir.
Yeah, since it is said as equal annual installment. So for all the tenure, so we call this period, the 6 years, as a tenure of the loan. So this whole the tenure, it should be the same EAI or EMI. Either it is annual installment or quarterly installment or monthly installment. It will be the same for the whole period. Okay. So now if I drag this, if I drag this, it is going to take the wrong information. Why? So how to solve this? So when you are going to pick the value from other cell, you should see that whether this value will be applicable only for this cell or whether the same value is applicable for another cells. For the other cells also is it applicable? So when it is applicable with the other cells, so what you are supposed to do it is you have to freeze it. So what is the shortcut key to freeze it?
F4.
Very good. So when I press F4, we are going to freeze it, enter. So now if I am going to drag this for the other years, so it is going to be the same amount. Okay, so this is how. So once you are going to finish with the year one calculation, the rest of others should be taken automatically. Okay, so you are supposed to select it from the first year to the last. So the last year end loan, it should be 0. So let me see that is it going to calculate it. So why here the problem is, so here you are supposed to take it equals to, so here what we are going to do it is we will add one more column. Okay, so I'll set this. So now I'll set this as a year 0. So when you people are doing with the calculations in the problems, so you are going to have in this format. Okay, so here in the year 0, you are going to keep it end loan amount only. Okay, that is 75,000. So for the year 0, the end loan is 75,000. That is the starting value of a loan. So the same amount will be year one's beginning loan. So I'll select this, enter. So now if I'm going to drag this, because I have linked, so when you are going to have a value manually, so then you'll have this kind of problem. So when I'm going to have a references from the previous column, so now if I'm going to drag it, so you can see that it is going to be 0 at the last. Okay, so like this you are supposed to do the calculation. So when you are doing it on the horizontal wise, so it is mandatory that you should have a year 0. So you are going to keep it as year 0. So if you do it for only year 1, and if you drag it, it should be able to come to the year, the end of the year's end loan should be 0. Is that clear? Or should I explain it once again to you people?
So what is the formula you have applied for calculating EAI?
So it's a PMT only. PMT formula only I used it.
Okay,
Everything
sir.
is same. what you learnt, it was the same thing only. Only the thing is what I added is year zero. Why I want it as year zero? I'll show it once again. See here, I'm going to use it EAI calculation by using PMT. So I think you might have been confused. So when you people were doing it, you did it as PMT. So here the rate was 12%, comma, here was N per was 4 years, and when you are giving it PV value, you are giving it as minus 10 lakh. So which is correct. So this is one way. Yeah, this is one way. So in the PV value itself, you can give it as minus, or before starting PMT, here also you can give it as minus. So both the ways, it is the same way. Suppose if you find it somewhere, instead of PV values minus, if PMT value is minus, so it should not be thought that it is a wrong. Even that way also you can calculate it. In this way also you can calculate it. Only that I made it a change, that's it. Other than that, nothing I have made it change anything in the AI calculation. Is that clear?
Yes, sir.
Okay, so I calculated this because if I don't put a minus symbol for the EI calculation, so the value will be in a negative. So when I use that negative balance over here, then it will have a negative calculation in all the table. So then it will be a problem. Okay. So here in the year zero, I don't put any of this value. I'll put it only with end loan. I'll put only the end loan amount in the year zero. That is nothing but the opening of your loan amount. So that is 10 lakh. Yeah. So this 10 lakh, I will carry forward it for the next year. Okay. So from year one onwards, you are not supposed to calculate anything manually. Everything should be reference. Okay. So this is reference, then equals to EAI. This should be reference, and this should be freezed, because every year it is going to be the same amount. There is no changes. Then year equals at year opening balance into whatever the percentage is. Either you can give it 12% manually, or here also you can be able to use this rate and you can fix it, because every year it is 12% only. So for that case, I can freeze this B16 so that it remains as a 12%. Okay, it gives the same value. Then equals to EAI minus interest amount. Then finally, beginning loan minus principal repaid. So this is what the amount is. So now you see that I've calculated only for the year one. Even if it has to be calculated for 50 years also, you can do only 1 year calculation. And if you drag this, select the whole table, I mean whole column, and if you drag it, you see that it will be zero at the end of the period. Is that clear to everyone? Is that understood, everyone?
Yes, sir.
Yes. So this is called as a debt amortization. So this is for yearly calculation. Okay, I'll leave it one, so you can see that, refer it, and then you can. I'll share the same document once again to you people. So keep it for reference and you can be able to do it. So now I'll do it for quarterly. So it is simple. So when you are calculating for annually, so you are giving directly. So that is, let me take it PMT, open the bracket, rate. So 13%. So this 13% is for 1 year. It's a yearly interest rate, right? Now, when you are going to calculate it for quarterly period, so you are supposed to divide it. So how many quarters makes 1 year?
Four.
So 4. So this interest amount is going to be compounded. So every 4 months, sorry, every 3 months, once, if the amount is coming out and again the same amount is invested, so it will be keep on doubling with the interest amount. Okay, so for that reason 4 times the interest amount will be calculated. Next, number of years is 6 years, so this will be multiplied into 4 times. Okay, so the percentage is divided by, and this years it is going to be multiplied, comma, minus 15 lakhs, comma, 0, comma, 0. So every quarterly you are supposed to pay with 90,973.36. So now this is like columnar wise calculation. The previous one what we saw, it was a horizontal wise. So now it is a vertical wise. Okay. So here we don't find it year 0 or quarterly 0. So directly we are going to start it from quarterly. So what is the beginning loan? It is 15 lakhs. Then what is the EMI? So this will be this, and this will be fixed. So the interest amount is equals beginning loan into the interest amount is 13%. So here what we are supposed to do it is, when we are going to calculate quarterly, you have to divide it by 4. So out of 90,973 rupees, 48,750. So principal repaid will be easy, minus this, and the ending loan will be this minus this. Okay. Now the second quarter will be equals to the previous month or quarter's ending loan amount, and as we know this is going to be the same amount, and this will be this quarters into 13% divided by 4, and this will be this month's EMI minus this month's interest amount, and this will be that quarter's starting beginning amount minus principal repaid. Is that understood till here, or should I repeat it once again?
Got it, sir.
Good. So now from here, say when you are going to do it for the horizontal wise, so you are supposed to do it for year 1. Okay, so sorry, that was a vertical and this is horizontal. So this is row wise you are going to do it, that is column wise you are going to do it. So when you are going to do it for yearly wise, so there we made it for 1 year and we dragged it from 1 year. But here when you are going to do it in the row wise, because you are going to start it connecting from one cell to another cell, so that referencing will happen from second line onwards, so the second row onwards in the table. So you are not supposed to select it from the first one, you are supposed to select it from second one onwards, and you can drag it. So either you can drag it or you can select the table. And do you remember what was the shortcut key we used it to get the cells calculation at the downward side? So if I want to copy from one selected cell to downward side, so do you remember what was the shortcut key I used? Say if it is a right hand side, control R. If you want to drag it on right hand side, it is control R. If you want to drag it on downward side, then it is control D. So can you see this value? At the end of the quarter 4, it is going to become as 0. Yeah. So you can see that it is a 0. So this is how the quarterly you are going to do it. And the same thing if you want to do it on monthly. So have you all understood, or should I repeat it once again with calculation?
So when you're dragging down, it is only control down or any other
Control
thing,
D.
sir?
Control D.
Okay, sir.
Okay. But have you understood with these two lines? See, this is going to play a major role. If you are correct with these two calculation, these two lines calculation, you are either you make it for 1,000 years. At 1 second you can do it. Say tomorrow personally if you want to do it. So this is going to be helpful to you to know about, in case if you take it a personal loan or a property loan, anything, you can be able to calculate it. So even though the bank is going to give you the repayment schedule, okay, so even though they give it from their side, if you want to take it as a reference and do you want to find it, is there anything changes, is there anything wrongly calculated by the banker person, so you can use this thing and you can be able to find it whether the amount has been calculated monthly properly or not, whether the installments whatever you have been given, so you have been asked to pay, is it the right amount they have asked you to pay or not? So you can be able to calculate it by yourself. So that is EMI, what we are going to say. So now, can you just put your idea? Anyone take an initiative and tell me that by keeping this as an idea. So can you guide me how to calculate the monthly installment? We have seen annual installment, we have seen with the quarterly installment. So take that reference of quarterly installment and tell me how to do this process. So from where to start? Try. Even if it is a wrong, if it doesn't works, no problem. I want you people to try. Please guide me.
Sir, it's equal to PMT
Okay, we have to start with,
equal to PMT.
yeah, where do I start with? So from which
Sir,
cell I
calculating
have to,
EMI, sir.
EMI. Okay, that is out of your table, right?
Yes, sir.
Oh, good. So I am coming here. Good. So equals to PMT. I'll open the bracket. Done.
Yes. 12% divided
Good.
by 12 because 12 month in a year,
Very good.
comma, it's for 5 years, so 5 into
Good.
12,
Very good.
comma, 12 lakh,
Okay. 12
I mean
lakhs.
minus 12 lakh.
Very good.
And future
Yes.
value is
Minus
0,
12 lakhs. 0.
and end of the period, again
Very
comma
good.
0. Yes, that's it.
Yes. So we are going to pay the EMI of 26,693 rupees 34 paise if the interest rate is 12%. Okay. Now tell me the table. Try.
The beginning loan is 12 lakhs, sir.
12 lakhs.
EMI
Okay.
is 26,693.34.
Okay. So what we can do it is equals to, so this we have to
P4.
select it and we have to freeze it. F4. Good. Next month.
For interest, we are supposed to fix 12% by 12, sir, and
Okay. Into
into
what?
C7.
So that is B7.
Yes,
Okay. That is nothing but beginning loan. Okay. So that month's starting opening loan amount into 12% divided by 12. Okay. Out of 26,693.34 rupees. So 12,000 it is going to be as interest. So equals to principal repaid is
C7 minus D7.
D7 minus D7 is nothing but the EMI amount minus interest amount. Then end loan will be
Beginning loan B7 minus the principal repaid E7.
very good. Okay, so this is the amount. Yeah. So now, so we found out for month one. So what will be the month two? Is there anyone else can try? Good. So who responded previously for calculating the EMI? Can I know their name?
Yes, sir. My name is Samprita.
Sanchita,
Sir, Samprita, sir.
Samprita. Good.
Yes.
Other person who gave me the first month's calculation.
Jaishnu, sir.
Jaishnu, good. So,
Yes.
except you both, is there anyone else can try for the month two calculation?
So can I?
Yeah, can I know your name, ma?
Kanishka.
Kanishka. Okay, try, ma. Please go ahead.
Yes. So the beginning loan for second month will be equal to F7.
F7 is nothing but the ending loan of the previous month. Very good. The next,
Then the EMI, it would be the same as the beginning for the
same
first
as.
month.
So what we can do it is we can be able to either we can drag it. So we can select this and we can drag it, or the other simpler way is if I want the same thing to be repeated over here means I can use equals to and select this cell and press enter. So it takes the same value. So when it comes over here, if I drag it, it will take this value as a year and this value is here. So again it will repeat. So the same value it will get repeated. Okay, good. The next,
Uh, Interest would be B8 into $B $2 divided by 12.
dollar B dollar 12. Okay, that is
B
B2
$2. Yeah, B2.
dollar. Very good. So I'll make it as B2 and dollar B dollar 2. Then
Divide by 12.
divided by, very good. That's nice. Good.
And
Next,
then principal repaid would be one second, so
good.
yeah, it would be C8 minus D8, the EMI minus
C8
interest.
minus. Yes, very good.
And end loan would be beginning loan minus principal repaid, so B8 minus E8.
So it will be B8 minus
E8.
E8. Good. So now we are supposed to drag it from yeah, month one or month two onwards.
Month 2 onwards.
Month two onwards. So don't touch with the month one. So you can select this. And what was the shortcut key we used it for the 60th month? That is the fifth year last month. So what is shortcut key to bring the answers?
Control D.
Control
D.
D. Very good. So you'll be having with 0. Okay. So this is how you are going to calculate it. So in the same data, I'll just try to give it to you people. I'll just copy this. I'll try to give it over here itself. Let me keep it as so one amount. Simple 3 years. Okay, I'll give it this as a question. So I'll share this document to you people. So please try with all this. So this one also I'll just try to give it to you with the new question. Okay, so try this. So give me a 2 minutes. I'll just upload it to the WhatsApp group. So now you people can be able to check it out in your group that been shared the file in the name as TVM practice. So you can practice it later after the session. Okay. So hope everyone are very much clear with time value of money concept. Okay. So the next thing is we are going to see with. So after we are going to find it, the time value of money. So here the implementation this it will be on the financial statements of an organization. So if I want to know that whether I am supposed to get into this business or not, so we are supposed to look into it. What was the history of it? Okay. So if I want to see the history of it, so we are supposed to see with financial statements. So the conditions. So I think in the first session I've been shared it with one of the document, so in which I have been specified about the financial statement. In that one financial statement, which is going to be very much useful, or if I want to say that whether my business it is going in the right direction or not, so I can be able to find it. So with my capacity of the business, what it can be able to earn it, so that you can be able to find it with an income statement. So income statement is one of a financial statement. So is that my screen is visible to you people?
No, sir.
Okay, I'll reshare it. Is that now is it visible?
Yes, sir.
Okay. So an income statement is a financial statement that shows you the company's income and expenditures. So always the company will be weighed, measured, so with a fixed turnovers. So what is its turnover it is making? So with that we should also see that it is not only the turnover we are going to finalize it. We should also see that what are the expenses they are making it. So if there is an earnings and 100 rupees, and if there is an expenses of 105 rupees, then it is not a right business to be chosen, so which is having a more expenses. So we have to see that, so whether the company is making the profit or loss for the period, the particular period. So the income statement is also be verified with the balance sheet and the cash flow statement, which helps you to understand the financial health of the business. Okay, so let us see that what are the things we are supposed to consider when we are going to prepare the income statement. So this is an overview of an income statement. So how the income statement it is going to be prepared with. So when you are going to prepare the income statement, the first line item we can say, the first consideration is, so what is the sales or the revenue earned for that particular period. So when you want to calculate the revenue, so you are supposed to see that the formula to calculate that, it is what is the quantity sold for that period with what sales price for each quantity you have sold. The formula to calculate the sales or revenue is the quantity sold into the sales price per quantity you have sold. Then next, the second line item. So you have to see that. See, is it possible to make any sales without a purchase? Is it possible to make a sales without any purchases?
No, sir.
Yes. So it is not possible. So I have to see that how much sales we are making it. So to make that sales, how much did I spend it? So for example, if my sales turnover for that particular period, the quantity which I have been sold is 500 quantity. An example of sales quantity is 500. But if I want to make that sales of 500 quantity, then they should be purchased of that 500 quantity. Okay. The next thing is it that whatever I purchase it, will I make a sales immediately for that particular period itself? There may be chances, because some of the business are there where the purchase will be done based on the order how much we are going to receive it. So it is very less in number of business types. But most of the business types, it will be first we have to have a ready stock with us. So we should maintain the stock with us, so that whenever there is a requirement, so whenever there is a sales going to happen, so we are going to sell that. So either we may sell it the whole quantity, how much do we have it, what we call it as the closing stock, or the stock in and whatever we have it, we are going to sell it. But in case if we are not going to sell it the whole quantity, so we should be able to know that how much quantity did we purchase, in that how much did we sold, how much did we sell it. So the quantity, how much we are going to sell it, so that we are going to call it as cost of goods sold. So for example, if I have purchased 1000 quantity and each quantity is costed at rupees 20, so that means the total purchase cost was 20 into 1000, that is 20,000. Now when I make a sales, let's assume it for that period I was able to make a sale of 600 quantity. Okay, out of 1,000, I may be able to sell up to 600 quantity. Now, the price what I have been purchased, the cost what has occurred at the time of purchase for each quantity was 20 rupees. So, will I sell it at 20 rupees only, or will I sell it at lesser than 20, or will I sell it at more than 20?
More than 20.
More than 20, right? So when I'm going to sell 600 quantity into, let me assume it, we are going to keep a margin of 5 rupees and we are going to sell it at 25 rupees. So now the sales, the revenue what we are earned, it is going to be 600 into 25. So can anyone calculate and let me know that what is the value do you get it for 600 into 25?
15,000.
15,000, right? So when I purchased 1,000 into 20 rupees, so it was 20,000 was my total purchase cost, right? So out of 20,000, I have sold it the worth of how much? 600 into 20. So how much is 600 into 20?
12,000.
12,000. Very good. So out of 20,000 worth of goods have been sold 12,000 worth of goods. Okay. But at 15,000, the 12,000 worth of goods was being sold at 15,000 rupees. So here the sales or revenue amount is 15,000. But how much did we spend it to earn this 15,000? Is it 20,000 or 12,000 or 15,000? To earn
20,000.
15,000. Did you sell all the 20,000 worth of goods? Okay,
No, we
I'll
sold.
just put it the numbers over here on the screen so that you may be having an idea. Total purchase was 1,000 quantity into 20 per quantity. So the total purchase cost is going to be 20,000. Now, out of this sales has happened 600 into 25, so which gives the value of 15,000. Okay, so now how much in this 20,000 total purchase cost, how much did we spend it to get this 15,000? Spent to earn rupees 15,000 was 600 into the purchase cost. See, 600 is a sales quantity. Okay, and this will be purchase cost. How much is purchase cost here for each quantity?
20.
20. Very good. So this is purchase cost per quantity. So what worth of goods we have sold? 600 into 20 is 12,000. Okay. So to earn 15,000, we have sold, we have spent 12,000 worth of goods. So this is called as COGS. That is cost of goods sold. So how much profit did we earn? Is it 20,000 minus 15,000, or is it 15,000 minus 12,000? So with this example, how much did we earn the money?
Sir, we earned a profit only of 3,000.
So we have earned a profit of 3,000 only by selling a 600 quantity. Okay. Still, you can see here 1,000 quantity minus 600 is 400 quantity. Still, you have it. Okay. So this is called as closing stock or stock in and what you have still with you. So now you can sell this 400 quantity for 25 rupees also, or more than that also. It depends upon the demand. Okay, for this particular period, we were being able to make a sales of only 600 quantity, but even that also we made a profit. So how much profit we made it is 3,000. Is that clear? So
Yes, sir.
15,000, this is revenue minus 12,000, which is a COGS value, and the difference what you get, this 3,000, is called as gross profit. Why it is called as gross profit? So here it does not end. The 3,000 rupees is not yours till. Okay. So this 3,000, you can see here I have given this explanation. Okay. So So this one I've just given in the formula type. So it is gross profit if you have it. The next you are supposed to subtract it with OPEX value. OPEX is nothing but operational expenses. So this operational expenses will include with administration expenses. So what are the things it will comes with administration expenses is rent, salary, maintenance charges, miscellaneous expenses. Okay. So minus whatever it is going to calculate with the total amount. So this amount should be minus with gross profit. So this, the difference amount, when you get it in positive, is called as EBITDA. So that is earnings before interest and tax and depreciation and amortization value. Okay. So in case if this is a negative, so that means it is directly a loss. So profit minus expenses, if it is minus, then it's a loss. In case if it is in a positive, then you are supposed to subtract it with depreciation value. Okay. Next, the difference of EBITDA value minus depreciation amount is considered as an EBIT value. So you know that EBIT stands for earnings before interest and tax. The next, in case if you have any loan amount, so just now we calculated with the debt schedule. So that interest amount, it has to be reduced from here. Okay. So that amount after you remove it, so it becomes from EBIT to, in that I it will be removed. So the remaining thing is EBT, that is earning before tax. Then minus tax amount, it is going to give you final amount, that is earnings after tax or profit after tax, in case if it is a profit, or net profit or net income or net loss. Okay, so this is what the format of an income statement. Is that understood, everyone?
Yes, sir.
Yes, sir.
Good. So I'll share this one also. Okay, so hope the document has been reached to your group. So please follow with us and check it out. So let us see that how to calculate these values. So give me a minute. I'll just add few values. Yeah. So hope you are able to see my screen. So please confirm me.
Yes, sir.
Yes, sir.
Yeah. So we will just try to calculate few simple things. So now, as we discussed, so the first line item of the income statement, it will be sales. So now, what is the sales value over here? So let me give it for example. In the case one study, if the selling price is 50 rupees and the quantity is 100. So what do you calculate it? How do you calculate the revenue? So how do I calculate this revenue value? So what is the formula to calculate this revenue? You can be able to see the formula on the top and apply that and let me know.
Sir, it's 50 into 100, sir.
So it is 50 into 100, right? So equals to 50 into 100. So it is 5,000. Okay. So if I'm going to give the other values also, it is going to be calculated selling price into quantity. So whatever the sales quantity we have been done, so we are going to calculate it and we are going to get the total revenue value, right? So I'll not give any other values as of now. You can try to calculate it. So I'll just give it with some numbers. Okay. So I'll just give this. So let us keep these values and I'll share this document to you people so you can calculate it with the revenue value. So now you tell me this. So read out the situation and try to give me the answer. So a tire manufacturer produces 10,000 tires. So we for the different vehicle segments. So in the 2019. So throughout the entire year, the company sold 2,000 tires at an average sales price of rupees 200. So out of 10,000, 2,000 tires are being sold at 200 rupees and 4,000 tires at 450 rupees and remaining tires, the remaining quantity were been sold at 650 rupees. So how do we calculate this? So finally, what is the revenue do we generate out of this? Was it the all the tires what we have been manufactured, we have been sold? So first you see that. So how many quantity did we manufacture?
10,000, sir, and all were
10,000.
sold.
All were sold. So now here we have not sold it all in the same price. We have sold it with the different prices. So we are supposed to calculate here. So first 2,000 were sold at 200 plus 4,000 into 450 and plus how many more remaining?
4,000.
So again 4,000 remaining was been sold from the
650
company
rupees.
at 650 rupees. So the total earnings what you earned it. So this it was 48 lakhs. Okay. So like this you can be able to calculate it. So now here the case number 3. So let me take it the first year 50 and the volume we have sold is 100. So the revenue was equals to 50 into 100. So it was 5,000. Now here it says it is expected that price will increase with 20% and volume will be increased at 30% from the year 2 onwards. So how to do this calculation? See, what was the year one's sales price? 50 rupees. So how much it is increasing?
By 20%.
So by 20% it is increasing. So that means what could be the sales price for the year 2?
It was increased by 10 rupees. So 50 plus 10, 60 rupees.
So it should be 60 rupees. So instead of me doing it manually, so 15 to 20%. So 20% is nothing but 10 rupees. Good. Now, how do we put it means? So we are going to take this value into the increasal is 20%. Okay. So on 50 rupees, it's 20% plus the old price value. It is not only increased value. We are supposed to consider the actual value also. So then it is going to calculate with 60 rupees. Okay. So you can do it like this also. The other way is when I know that the same cell reference I have to take it twice. So I can be able to make it in a simple ways. So I'll take it the very common thing. That is B42 is common. Why means I'll take it for twice into open the bracket and I will give it as 1. So now B42 into 1 is nothing but the previous year value which I am supposed to take it plus I have an increase of 30%. Okay. So instead of taking B42 twice, I have made it as one common into 1 plus 30%. So the increasal percentage I have given and I'll press enter. So that is 130, and this is common, this into this. Okay, the same way I can be able to do it for the next year, equals to previous year into, open the bracket, give it as 1 plus the increasal percentage is 20%. See, on 60, 20% means it's 72 rupees. Okay, so here it's the same, equals to into, open the bracket, 1 plus 30%, so that it will be keep on increasing with the previous year value, not with the first year only. Okay, so like this you can be able to calculate it. So year on year calculation. Okay, so this is year on year increasal calculation. Is that understood, everyone? Or should I repeat it? Have you people understood? Is there anyone online?
Yes, I understood.
Okay, so I'll share this document. So we'll wind up for the day. So please try with all these things so that it will be helpful to you too. So regain the knowledge at the time when we are doing with the particular project. Is that fine? So thank you all. Have a wonderful time.
Thank you, sir.
Thank you.